Creamer Media's Mining Weekly is interviewing Samuel Mokorosi, the head of origination and deals at the Johannesburg Stock Exchange. South Africa is seen to be in a somewhat desperate need of growing the small end of its stock mining market. What, in your view, should be done to ensure investor support for junior mining companies that are aspiring to list?
Martin, we've seen some small kind of slivers of hope. Copper 360 was a successful listing recently. We've also seen Southern Palladium also listing in the last year or so. So we are seeing some of those listings coming through, but certainly more needs to be done. And it was interesting to see the government's 1-year review of their exploration strategy. And, talking about things like flow through shares that we can borrow from the Canadian market, talking about the cadastral system that can show where all of the mining rights and the prospecting rights are, and on also kind of just being clear on triple BEE. And all of this is kind of government policy that can help reinvigorate that space. Certainly on our side, we're also looking to reinvigorate, specifically on the listing side. We've been undergoing a process of cutting red tape, making it easier for companies to get onto the exchange and remain on the exchange while making sure that investor protections are of the highest caliber. So those are some of the things that we've been working on.
And you think this is what led to the of like Copper 360, and you mentioned Southern?
Yes, Southern Palladium and Copper 360. I think that it's all part of a ecosystem that we are looking to improve on, and small bits and pieces help to stem the tide. So, it's hard to say, was it one thing or another that helped these companies list, but it's around making the ecosystem easier to access and easier to get funding.
You saw some encouragement from the government's latest statement, and you saw references to flow through, and you saw references to cadastral. So that gave you some confidence.
Indeed. And I think that, this is the kind of collaboration that we need between industry, government, the exchange, to help reverse the kind of the tide that we're seeing. We've also been engaging with specifically asset managers and other buy-side participants to all kind of put our shoulder to the wheel to make smaller companies feel more welcome on the exchange, and specifically give them access to capital in an important theme for our activities.
We've been talking about this for a long time, but it seems like we're possibly moving a little bit closer. There's a collaboration you're talking about. That sounds encouraging.
It is encouraging. I think also, obviously, the market helps us in this regard. So we've seen a lot of appetite around these kind of battery-related minerals, around renewable energy inputs into this. So vanadium, lithium, copper, obviously, in all of this wiring that's required for electric vehicles, as well as renewable energy. Martin, we've also seen, even in the PGM space, some appetite around the kind of greenhouse effects and greening minerals, etc. So I do think that South Africa is well placed at the right time for this green revolution that we're seeing globally, and we need to make sure that we make the most of that across different players in the ecosystem. And so that's giving me some comfort that we're seeing both private sector and government look to take advantage of all of these developments.
But it's quite a pity that we have to be talking like this now, because South Africa, has a reputation of being a mining mecca.
Yes.
And yet it only has, less than 40 mining companies listed, while other mining jurisdictions have hundreds. What should be done to encourage more mining listings and to try and match other mining jurisdictions at the big end as well?
So 100%, and it's a frustration and a pity that we face on a daily basis as well. I do think that there's governing policy and legislation that we certainly are engaging government with. both in terms of the input side, the companies looking to raise capital, and I've mentioned some of those great initiatives that the government is working on, but even on the financial market side, we've seen regulation that makes it harder for institutional investors to take more risk on earlier stage mining companies like exploration companies or junior miners. We've seen legislation that makes it harder for individuals to get tax deductions on investing in small caps, etc. So these are conversations that we are engaging with government. So certain things like the way that a CGT is treated for individuals versus institutions, the way that Australia's superannuation legislation that allows high net worth individuals to invest some of their pension in single stocks helps encourage those markets to participate in earlier stage mining and exploration companies. And so those are the kind of policy engagements that we're having with government around all of these.
And we see a lot of countries very happy to mine here, but they want to list. They want to be listed elsewhere.
Yes.
How can that be?
Yeah, I think Martin, it is the nature of our stock exchange and our broader savings industry. So we are a highly institutionalized savings market. So if you look at the savings industry in the hands of our institutions, which are getting larger and larger versus our retail market, we have a much more disproportionate savings industry in the hands of institutions. And institutions are great because they've got the expertise and the know-how to invest in these companies, but they've got incredible liquidity constraints and regulatory pressures that make them generally more conservative, whereas other markets like Australia, like Canada, even the AIM market in London have a higher proportion of both retail and high net worth individual investors. And so that's a market that we are looking to revive on the JSE, that we can have more retail, more high net worths investing in our earlier stage mining companies. If we look at the large mining companies, I think that it's fair to say over the world, globally, we've seen consolidation in that space. And so we are fortunate that we still have these mining giants on our exchange and finding value in being listed on the JSE. But, you've seen consolidation globally across these large mining houses. And so that then tends to reduce the number of listed companies in the bigger end of the market cap. But our focus really is engaging the small caps mining companies to list and remain listed on the JSE.
And there is a possibility that people could really be encouraged to dual list. You see a lot of companies that are not listed here, listed elsewhere, mining here. How easy have you made it for them to list as a secondary listing on the JSE and a primary listing elsewhere?
So over the last few years, we've made it easier and easier for secondary listings to be listed on the JSE. And as an example, probably about 18 months ago, we had DRA, which is a mining services company, listing primarily in Australia and then in a secondary inward listing here on the JSE. And what we've done there is we've said across 11 exchanges, some of the leading exchanges in the world, including Singapore, which is our latest addition, we stand as a secondary listing venue so that you as a listed company, you adhere to the requirements of all of your primary listed venue. So in the case of DRA, the ASX, and then we then look to regulate you on a lighter level because you're already being primarily regulated by the ASX. We even have a fast track inward listing program across sort of 5 leading exchanges in the world. And under those exchanges, your inward listing can take a few weeks. And we saw that with AB InBev a few years ago. And you don't even need a full prospectus. You can actually list with an announcement that then refers you to the home exchange and the company's website for all the required information to adhere to top-notch investor protection. So those two things have really made it as easy as possible for inward listings. So that's the fast track inward listing and the secondary listings framework.
And what could just give them that last push to do it? You know, is there anything that needs to be done that could just tip them into doing this?
Sure. I mean, we are constantly on the plane around the world meeting with potential inward listing companies. I mean, we were in New York late last year, in London as well. We are in London again this year, as well as Singapore, meeting with these companies. And obviously, the decision to list anywhere in the world is never an easy, quick one. But we believe that we're starting to see some fruit of the labors of years of wooing these companies to list domestically, even if it's a secondary listing or even a fast track.
And what, in your view, should be the biggest takeaway from this interview that we're having?
So biggest takeaway is we as a JSE are certainly pushing as hard as we can within our regulatory framework to keep inviting junior miners, exploration companies to list on the exchange. We are engaging with government to see what can we learn from all over the world in terms of other jurisdictions that have done better with listing these companies. And also, you know, we are boots on the ground across the world, wooing these companies to list on the exchange.
That was Creamer Media's Mining Weekly, speaking to Samuel Mokorosi, the head of origination and deals of the Johannesburg Stock Exchange.